got the inflation number, which has come out at 7.25%. This, of course, compares pretty much in line with what we were expecting at about 7.6%. So it is come in marginally lower than what the street was expecting, which is going to be good news nevertheless. So 7.25% vis-a-vis 7.5%, which we clocked in for the month of May. The headline number actually is the only number that's come in so far, and we seem to have the markets actually which are reacting. We've also got the primary articles inflation number actually, which is coming at about 10.46% vis-a-vis 10.8% for the month of May. And we've also got the bond markets actually that are reacting to this bit of news. We've got the 10-year yields coming in at about 8.3%. We've also got the 5-year yield that is, of course, not doing too badly. And the rupee also seems to be giving a thumbs up to this bit of news, because after touching those 55 levels, of course, it is at 54.9. We've got the chairman of the Prime Minister's Economic Advisory Council, Dr. C. Rangarajan, now joining us on the line. Dr. Rangarajan, great to have you with us. Just first up, your perspective on what you make of the headline numbers that's come out, and especially the internals as well. What do you make of those?
I think the inflation shows some tendency to decline. I think that's a good trend. More particularly, the non-food manufacturing inflation is around 5%, which is reasonable. But on the other hand, we need to watch what will happen to primary articles inflation and food inflation. The prospects of the monsoon are not very clear at the moment, and therefore we need to watch out for food inflation. But certainly the news is somewhat heartening.
Dr. Rangarajan, where does this leave the Reserve Bank of India? Does 7.25% merit a move?
Well, I think the Reserve Bank will have to take several factors into account. It is not only what is happening to current inflation, but also the future prospects. As I mentioned, some concern is still there because of the erratic monsoon. Therefore, that needs to be taken into account. Therefore, while this has provided some favorable environment, I think RBI will have to take into account the future prospect of inflation before deciding on the policy.
Now, Dr. Rangarajan, an additional internal that's also, of course, important at this point, it's the fuel group number that's coming at about 10.2% vis-a-vis 11.5% for the month of May. And fuel prices, specifically for India, it's an interplay between the global crude volatility as well as the currency movement. So given both these two variables, important variables, and the kind of, range that we've been seeing for them, because crude is, again, back towards that $100 a barrel mark, it's shown a fair bit of strength as well. Where do you think we are headed as far as fuel price inflation is concerned?
Well, the fuel price inflation depends, as you said, on two factors: the international crude price as well as the rupee dollar rate. But both are softening now. I mean, I think perhaps the international crude prices may not necessarily go the way they did last year. Therefore, one can expect some moderation in fuel inflation. But it is always very difficult to predict the behavior of fuel inflation.
Dr. Rangarajan, some of the experts on our panel that we've been speaking to have also mentioned the rupee volatility, which is a major cause of concern. What's your view on that in light of the fact that the current account deficit is high, the capital flows are fairly erratic? Is this likely to persist?
Well, the capital flows have been erratic, and it is really the mismatch between the current account deficit and capital flows which have been responsible for putting pressure on the rupee. But as recent weeks have also shown, that when FII inflows have come back to the market, there is a moderation in the behavior of the rupee dollar rate. But given the fact that the FII inflows may improve over the months, I expect that the volatility in the rupee dollar rate may not be of the order that we saw in the last few months.
Right, and Dr. Rangarajan, just, another word on, how you see the inflation trends panning out for the rest of the year, year, especially given that the Met Department once again has raised a red flag this morning saying that, for this month at least the rains will be below the forecasted levels. Do you think we could be inching back towards the double-digit mark?
No, not necessarily. I had expected that inflation to come to around 7% in the normal course. But what we really need to do is that if the forecasts on rainfall turn out to be adverse, we should really move our food grain stocks fairly fast and ensure that the inflationary expectations are not allowed to raise their heads. I think we have enough stock of food grains, but it also depends upon how we move the food grain stocks in order to dampen inflationary expectations. I think advanced action in this regard will be required.